All right, hello and welcome to the Jefferson Educational Society's digital programming. I'm Ben Spagan and I'm the Vice President at the Jefferson and am a contributing editor at the Erie Reader. Joining me in conversation is Dr. Kenneth Louie, the Director of the Economic Research Institute of Erie, or Erie, and Associate Professor of Economics at Penn State Barron. As noted on its website, the purpose of Erie, the Economic Research Institute of Erie, is to collect, analyze, interpret, and disseminate data, information, and forecasts for the Erie, Pennsylvania regional economy. Its continuing research program seeks to help the local community better understand the regional economy and its linkages to the national economy. Now, one of the tools in the Erie tool chest is the Erie Leading Index reports. In the wake of the COVID-19 crisis, Dr. Louie and his team devoted a special issue of ELI to analyzing the local economic impact of the pandemic. And that was published in early May. With the crisis of the pandemic continuing, we're here to check in with Dr. Louie to see what Erie's economic climate looked like before the pandemic, where it stood when ELI's special issue came out in early May, where it is now as the Bureau of Labor and Statistics has released new numbers, new local numbers, and perhaps forecast where it may be headed based on the data that we now have available. Now, the list of courses Dr. Louie has taught in the publications that he's written is extensive. I kindly invite you to review all of that on his a biography page on Penn State Barron's website. There you'll also find past issues of the Erie Leading Index report and many other resources thanks to the Economic Research Institute of Erie. Folks, since this program is first airing live on the Jefferson's Facebook page, we will work our way through as many questions from you, the viewers, as we can as we host this event. If you do have a question, just leave it in the comments section below, and we'll do our best to get to those. If you happen to be watching a later broadcast of this event, please do feel free to send us questions, and we'll get them along to Dr. Louie as best as we can. And of course, for more information about upcoming Jefferson Educational Society programs and publications, please visit www.jeserie.org and be sure to like us on Facebook and follow us on Twitter and Instagram. Dr. Ken Louie, thank you for joining me for this discussion.
Thanks a lot for having me, Ben.
So you're no stranger to the Jefferson stage, and I'm so delighted that you can join us here because we're in such a critical moment with the pandemic and looking at the economic impact of it. And I want to get to that, but first, I covered a brief intro of the Economic Research Institute of Erie and the Erie Leading Index in that introduction. But for those wondering more about what Erie does and what ELI provides, can you unpack that for us?
Sure, of course. You've done a great job explaining what we actually do. So our mission is clearly stated in your statements. The Institute was founded in 1982, so 38 years ago. It's a long time, for the purpose of establishing a place where we can do research and outreach and connect with the local community, especially in terms of understanding local economic trends. And so after collecting and analyzing and disseminating this information, we hope that more informed decisions can be made by local leaders, average citizens of the community. I would just add a couple of other things to what we do. We also do collaborative research projects with local industry. So we have a program called Innovating Through Collaboration, where we set up teams of faculties and students to conduct research projects with local companies. So if companies are interested in doing that, they certainly can contact us. As well, our proudest accomplishment is the training of countless students who learn how to do applied economic research and who have gone on to very, very successful careers. So that's a little bit about what the Institute does. In terms of the Erie Leading Index, that's our signature product. We disseminate our economic analysis in many ways. For instance, we have an annual conference that each year focuses on a theme that is of interest to the local community. We also have on our website a comprehensive guide to the Erie economy. It's literally everything you wanted to know about the Erie economy. But perhaps our signature product is the Erie Leading Index. And as you indicated, it's a quarterly publication that tracks local developments in Erie. And the distinguishing feature about it is that it allows us to identify turning points in the local economy. that is when the economy is going to turn up or turn down, in advance of those actual turning points. So as such, the Erie Leading Index, and that's why we call it a leading index, is a great planning tool for business leaders, for community leaders, about 8 months in advance of what's likely to happen, as measured by employment in Erie County. The way we compile the leading index is that we use 8 different variables that track economic activity at the national, state, and local levels. So nationally, we look at things like US building permits, transportation services freight indices, the S&P 500 stock index. In terms of monetary policy, we look at the growth of the M2 money supply. We look at financial conditions such as the difference between long-term and short-term interest rates. Locally, we look at things like manufacturing employment in Erie and average manufacturing hours across the state of Pennsylvania. So we aggregate these measures across the board into a single composite index using appropriate weights. And that single index allows us to track how the economy is performing and to anticipate turning points in the overall local economy.
So Dr. Louie, I'm so glad that you mentioned the annual conference because I've been to several of them. Always a fascinating day. Always great experts that you bring in, both those at the local level who have something of value to contribute, but those at the national level as well. Really thank you for that, and encourage people to go over and see all the work that you do on that website. We'll get to that later. One of the things you talked about is taking a look at the entirety of the Erie economy. Erie has been noted historically for its manufacturing, but its economy is so much more diverse than that. For those of us that aren't economists out there and maybe haven't read the last few issues of the Erie Leading Index, can you give us a 3,000-foot view of the economic ecosystem in the 21st century for Erie? What do we look like right now?
Sure, of course. Now, there's a lot that we can discuss, and often when we talk about so many different economic numbers, it's hard to digest and to understand so much information. So I think the best way to understand the current state of our local economy is to focus on 3 central benchmarks or key variables that give us a pretty good indication of the big picture. These are benchmarks that economists typically use when they analyze the economic performance of an aggregate economy, whether at the national level or at the local level. And so these 3 benchmarks are output, income, and employment. So output is, what do we produce? How much do we produce? What kinds of things do we produce? Income is, how much purchasing power do we generate in the course of that production? Because obviously purchasing power is a major indicator of economic well-being. And then employment, how robust is the local labor market? Is it easy to find a job? How many people are unemployed? So if you look at these 3 benchmarks, I think that is a good way to kind of see the broad picture in the aggregate. So first, with respect to output, we've been fairly stable. Output has been growing in real terms over the last couple of decades. However, the composition of that output is much different. So manufacturing, for instance, is a smaller and smaller share of what we produce, although it is still the biggest sector by far. Manufacturing in Erie, given our long historical legacy of heavy manufacturing still contributes over $2 billion of output to the local economy. That accounts for almost 20% of total output in Erie. But we're gradually moving away from manufacturing, and so in terms of output, we're seeing growth in other sectors like educational services, healthcare, social assistance, finance, insurance, and real estate, leisure and hospitality. Those are some of the faster growing sectors. So in terms of how much we produce, it's roughly $11 billion on an annual basis in real terms, that is corrected for inflation. But the composition, again, is gradually moving away from goods sectors to service providing sectors. In terms of income, we're also fairly stable. In fact, on a per capita basis, real personal income grew by over 16% over the last 10 years or so. And in the last year for which we have data, real personal income per capita grew by over 4%. But that's still a very aggregated measure. So instead of looking at just that per capita per personal income, economists sometimes prefer to look at what we call median household income. This is perhaps a better indicator of the average level of well-being for households. And in this regard, we fare a little bit less well, even though median household income in real terms increased slightly in the last year for which data are available, 2017 to 2018. Unfortunately, median household income has been fairly stagnant for the last 10 years or so. In fact, it's slightly below where it was about 10 years ago. So, you know, we hope the economy can perform better in the future, but right now it's kind of on a stable path in terms of output and income. In terms of employment, likewise, we've been fairly stable. Since about 2016, employment in the non-farm sector has ranged from between 126,000 to 127,000 people, although obviously with the pandemic, it fell precipitously between the month of March and April. Currently, it's at about 107,000 people. That's a drop of 15% just in 1 month alone. So that hopefully gives a broad picture in terms of what we produce, how much income we generate, and the level of employment that we have.
And so I think that that helps us understand, because we often hear about, you know, the rise of meds and eds, and here we have those growing in Erie, still manufacturing at the top, still larger than state average, still larger than national average, but we do see the diversification of our economy. So I wanted to boil it down to growing, shrinking, or plateaued. It sounds to me like we're caught in between the plateaued and slightly growing. Is my read on that right? If we were to benchmark the overall economy for Erie of where we were previous to the impact of COVID-19?
I think that's a fair overall assessment. There are certainly many indicators that are stable. I've noted some of them, and some indicators have actually grown. I've indicated some of those. Although I would still add that there are some indicators that unfortunately point in the wrong direction, and we need to do in the community more to try to boost those benchmarks. For instance, the relative lack of growth in median household income I mentioned, but as well, if we look at indicators of overall well-being such as poverty, unfortunately that remains stubbornly high. It's over 15% in Erie County, and it's even higher for children, individuals under the age of 18. And in terms of racial breakdown, it's much higher for certain ethnic groups like Black or African Americans in Erie County. So I think overall, it's fair to say that we're still holding a pretty stable pattern, but there is room for improvement in some of those benchmark indicators that measure well-being.
So this is a question coming in from the audience, one of the ones I've received here. We always see non-farm jobs versus farm jobs when we see these reports. Can you tell us why we see that? Why those are broken apart?
Yeah, it really reflects the way the government collects these statistics. There are two major government agencies that gather all these numbers every month on jobs, unemployment, and so forth. The major one that we most follow is the Bureau of Labor Statistics, or the BLS. And historically, what they've looked at is only jobs in the non-farm sector. And that's typically non-farm jobs. Now, the other government agency that also collects data on employment is the Bureau of Economic Analysis, or BEA. So the BLS and the BEA, the BLS is part of the Labor Department, the BEA is part of the Commerce Department, which are cabinet level departments in Washington. And what the BEA does in the Commerce Department is a little bit broader. They include agricultural workers, as well as other groups that are excluded by the BLS, and that's why sometimes you see numbers that seem to be conflicting. But it's still perhaps reasonable to focus on the non-farm sector, because historically, if you look at the farm sector, it's really a relatively small, and unfortunately, for those who are working in that sector, it's a diminishing proportion of the overall sector. So very, very minute proportion. And therefore, most of us tend to look at the non-farm numbers.
So looking at manufacturing again, one of the things that we do hear here in Erie often is advanced industries. We hear those words when it comes to our economy, particularly around advanced manufacturing, where again, we happen to be higher than the national average. Can you highlight the impact of advanced industries, particularly advanced manufacturing in our region?
Yes, that's a very, very good question. Advanced industries are very, very distinctive types of industries. The Brookings Institution, which is one of the leading think tanks, has done studies on this, and one of their more recent studies defines advanced industries as those sectors that have two key characteristics. One is they spend a fairly large amount of money on research and development. So the benchmark it uses industries that spend about $450 per worker per year on research and development activities. And then also these are industries that employ workers who are in the so-called STEM fields: science, technology, engineering, mathematics. Industries that have about 1/5 or 20% of the workers in STEM field occupations fit this category as well. So the examples are sectors like medical and diagnostic laboratories, aircraft parts, computer systems design, precision instruments. All of those things are examples of advanced industries. They're not all in manufacturing, however. There are some that are in the service sectors as well. So as you pointed out, these are very crucial sectors because they tend to generate very positive economic outcomes for those who are part of those sectors. So in Erie, for instance, these sectors account for over 12 or about 12,000 jobs directly. In addition, there are about 9,000 jobs that indirectly connect with these advanced industries, so that if you add them up, roughly 21,000 jobs in Erie are in these so-called advanced industries. That's about almost 9% of all the jobs in this region. As you pointed out, these industries tend to pay better. In Erie, the average annual pay for workers in these sectors is over $78,000. The industry generates almost $2 billion worth of output. So that's the background. And research tells us that these industries, given their focus on innovation and leading edge processes in terms of production and distribution and so forth, these industries tend to be very, very important for economic growth and for stimulating local economies. So I'm glad to see that Erie does pretty well. But as I said earlier, there are always indicators we can try to improve upon. So for instance, I just saw a recent study from the BLS, the Bureau of Labor Statistics. They look specifically at employment in the sector that does scientific research and development. So it isn't simply production or services, it's actually doing research in scientific endeavors. And what they found is that unfortunately, Erie is fairly low along that dimension. Compared to the nation at large, the proportion of Erie's employment dedicated to scientific research and development services is very, very low. So that's something that we could perhaps try to focus on and build up in the future, given the potential positive repercussions that may have. Now, I have to say that there are initiatives underway. So across our community, there are many initiatives that are trying to push us in that direction. I'm sure you know about the Innovation District downtown. You probably also know about the initiatives that we're taking at Penn State Barron. our Knowledge Park, our Open Lab concept, which tries to foster entrepreneurship and innovation, and our most recent collaboration with UPMC Hammett's McGee Women's Research Center. Those are all examples of this focus on advanced industries. And in the long run, more of that kind of activity, I think, will help us be more dynamic and more prosperous.
And that's really been one of the exciting things, I think, on the campus of Penn State Barron, to see the collaboration most recently with UPMC Hammett McGee's Women's Hospital. But also prior to that, the $16 million investment in the Advanced Manufacturing and Innovation Commons, and really then putting students across majors, interdisciplinary learning into one building, but then also inviting in businesses to be present to that through the Knowledge Park footprint. That's been a really exciting thing at Penn State Barron. So it's one of the things that really gets my attention, and I think that is a path forward for our economy. But I want to look right now in our most recent past, the first quarter of 2020. What did we notice as the impact of COVID-19 hit us particularly in March, as we begun practicing social distancing measures, and businesses that were non-life sustaining or non-essential had to begin closing. What did those initial impacts look like? Maybe some of the things that you unpacked in your special issue. Tell us a little bit about that.
Sure. So as you pointed out, the impact really didn't hit us full force until late February, early March. And as we noted in our most recent Erie Leading Index, that index has been rising for the past 2 quarters, which also reflects the relative stability that I described before. But starting in February, so if you look at the month from February to March, we started to feel the impact, although the impact was still relatively modest. In that single month, we lost about 300 jobs. But if you adjust on a seasonal basis, it actually is more than that. We actually lost about 600 jobs on a seasonally adjusted basis. That's because ordinarily during that time of the year, we would have been adding jobs. So it was still modest, but we started to feel the impact. The impact has been much, much more dramatic in the most recent month, for which data was just released last week. And this is the period from March to April. From March to April, Erie lost, on an unadjusted basis, almost 18,000 jobs. 18,000 jobs. That accounted for about 14% of all the employment that we have. Adjusted for seasonal patterns, it's actually higher at over 19,000 jobs, or about 15% of total employment. So the impact is beginning to be felt, and it's a major impact. I actually also did some back of the envelope calculations to give people some sense of the magnitude. So we often just look at the employment numbers, and they give us a fairly good picture, but sometimes it's also helpful to look at the monetary or financial impact. So just doing some very, very rough calculations. Again, these are very rough. You need to dig down deeper to get more detail. But I looked at what sectors lost the most jobs. And in Erie, it turns out that, as you would expect, leisure and hospitality, that sector lost the most jobs. Leisure and hospitality lost in the period from March to April, 8,600 jobs, which was about 2/3 of their employment level. They lost 2/3 of their jobs just in 1 month alone. And the job losses in that sector accounted for almost half of all the job losses in Erie County, 48%. So again, that's to be expected because, as you can imagine, this sector includes people working at the hotels, the restaurants, other entertainment industries in the area. And so what I did was I looked at the average wage of workers in this industry, and I matched that up with the job losses. And the very rough back of the envelope calculation I came up with is that in this 1 month period alone, from March to April, we lost over $12 million. $12 million of income was lost just due to the job decline in the leisure and hospitality sector. When I did this for the entire economy, for all industries, again, using the average annual wage that we see for this area and the total number of jobs we lost across all industries, the figure is even more staggering. Just in this 1 month period alone, the income lost, very rough estimate, is about $65 million. $65 million. So you can imagine these are dollars that could have been and probably would have been spent on economic activities across the local area and would have generated spillover effects in many other parts of the economy. And yet it's foregone, it's lost. And so that's a pretty staggering estimate, even though it's very rough, of the impact of COVID-19. Now, in fairness, if you look at it in relative terms, it's not as staggering as you might think, because our economy, as I said before, produces about $11 billion worth of output and about $12 billion worth of personal income every year. So on a relative basis, the $65 million loss of income only works out to be about 0.5% of total personal income in this area. So in absolute terms, it's huge. In relative terms, it's something that we can probably absorb over the long run.
I think that's the first follow-up I wanted to ask, which is, what does this mean long term? You know, can we take a hit like that, and what does a bounce back look like in terms of trying to course correct our economy to where we would have been had there been no pandemic?
Yes, I think most places are grappling with the same question. And I think for most places, the answer really boils down to something that's beyond the scope of economics. I think most experts would agree that how quickly we recover and the magnitude of the recovery will depend more on developments in the health and medical arena. So will we be able to develop the vaccine or other therapeutics that will help to mitigate this drastic negative impact that we've suffered? That really is going to drive the economic side of it. Without more definitive answers from the health and medical sectors, I'm afraid it remains an open question as to whether and how fast and how much we can recover from this setback.
And so, Dr. Louie, I'm going to put you on the spot here with an audience question, because I think the audience is thinking about some of the stimulus efforts or recovery efforts put in place by the federal government. And so this person's asking, what impact has the CARES Act had on bolstering the Erie area companies? Has it been as effective as planned, or did it miss the mark? And I know I'm putting you on the spot there for that. I wonder, as an economist, if you have a pulse on that and the impact that CARES and things like the PPP, the Paycheck Protection Plan, that falls into that, does that offset some of what we're talking about here in terms of those losses we experienced in a month? Do you know anything about that right now?
Sure, that's also a very good question. I haven't yet seen data that is at the disaggregated geographical level. So it'll take more time for us to disaggregate the numbers to see specifically the impact on local places like Erie. But what I can say is that there is some information that's coming out more aggregated at the national level. And I think overall, the key assessments that we can point to are that, yes, from a broad standpoint, it has worked. You see businesses that otherwise would have definitely gone out of commission because most small businesses have cash flows that probably last no more than a few months. And without these protections as passed by Congress, these mitigating factors, a lot more businesses would have gone by the wayside. So I think that's clearly one conclusion we can make. At the same time, anecdotally, what we also have learned is that The logistics of the CARES Act probably needs improvement. There are anecdotal stories about businesses that are not able to get access to these resources, or there may be long delays in getting access to the funds. So like everything else, it seems to be working, but there are things we can improve upon. In the future, this is one thing that I'm interested in very much, to see, just like the questioner asked, what impact it has had specifically on the Erie economy.
Well, I think that the thing that was surprising for me to find out was that, most small businesses have a cash flow around about a month, as you pointed out, and for the restaurant and service industry, it's less. It's often sometimes measured in just a few weeks instead of actual months. And those are successful companies. Those are just that's just a situation that I think many of us were not aware of. Earlier, you had mentioned that the service industry, the job losses there, accounted for nearly half of all of those lost. Can you give us a sense of what the other half of that pie looks like? Was there anything that stood out to you, in observing what the other 50% of that impact looked like?
Sure. I can just list some of the sectors that lost the most jobs. Two sectors in particular accounted for about 60% of all the job losses in this 1 month period. And those were the leisure and hospitality sector, restaurants, hotels, and the retail trade sector, which is also not surprising because of the business closures and the shutdowns. So retail trade and leisure and hospitality combined accounted for about 60%. Other sectors that lost jobs also: professional and technical services lost almost 10%. Even education and health services lost about 1,000 jobs, which was about 5.5%. And the sector that has been really challenged for quite a while, manufacturing, also lost about 5%. 900 jobs, about 5% of jobs in total, and it accounted also for about 5% of the total job losses. The other sectors, they accounted for relatively small percentages: wholesale trade, financial activities, hospitals, state government. They all lost by either 1% or less. So the big sectors in terms of job losses, again, are leisure and hospitality, retail trade, and professional and business services.
And this is a global pandemic. Erie is not being hit by this alone. When you're taking a look at the numbers, are we aligning to peer metropolitan statistical areas in terms of the impact that COVID-19 has had on us economically, or are you seeing differences? What key takeaways should we have when we look to peer regions or peer areas in terms of the impact that they're experiencing and the impact that we're experiencing?
Sure. So that's also something that can be discussed in very much detail. So I'd like to kind of organize it so that it's a little bit easier to understand for your viewers. First of all, we have to define what we mean by peer area, because it's not always clear as to what areas we ought to be comparing Erie to. And so the way I thought of it was, we can look at kind of three different levels of comparison. One, because we always tell non-Erieites that we live in the middle, in between Cleveland, Buffalo, and Pittsburgh, I think one just very quick common comparison is, well, how are we faring with respect to these neighboring cities? And I would include in that set cities like Akron, Ohio, and Youngstown, Ohio, because they're often compared to Erie as well. So if you use this first basis of nearby cities, we actually are doing pretty well. As I said earlier, Erie lost about 15, just under 16% of our jobs in this 1 month period, but that's less than all of these other cities. In Buffalo, they lost almost 20% of jobs in this 1 month. Pittsburgh, over 17%. In Cleveland, almost 17%. Akron, 16%. Youngstown, 16%. So we fare better than all of these other nearby cities. The second basis for comparison is to look across the state of Pennsylvania, because we're always asked, well, how are we doing compared to the rest of the Commonwealth? So if you look along these lines, we're somewhere in the middle. There are some metro areas in Pennsylvania that have fared worse. So Lancaster, Scranton, Philadelphia, they have all had more job losses on a percentage basis compared to Erie. But there are other metro areas as well. Allentown, Reading, York. These have had smaller decreases on a percentage basis in their employment. But perhaps the most meaningful comparison is in the third set of cities that I looked at. And this is where you look at cities that are more or less comparable to Erie. Because after all, we want to make apple to apple comparisons rather than apple to oranges comparisons. And so what I did was I looked up about a dozen cities that were very similar to Erie, but even deciding what is similar versus dissimilar is very difficult. You know, what dimensions should you compare? So I used two comparison benchmarks that are very common in our field, which is one, the industrial structure, as measured by the percentage of the local economy that is in manufacturing. Again, a very rough aggregated benchmark, but nevertheless, it gives us a sense of the industrial structure. And then second, the size of the economy, both in terms of the real output, GDP that it produces, and roughly in terms of population. Because really, that's the only way to see how we're doing, to compare us to other cities that are relatively similar along those lines. And if you do that, if you make those comparisons, we unfortunately tend to be on the higher end of job losses. There are only a few cities that are like us in terms of industrial structure and in terms of overall size of the GDP that have had more job losses. So Saginaw, Michigan, Kalamazoo, Michigan, Eau Claire, Wisconsin, they've had more job losses. But there are many more cities similar to us that have had fewer job losses. Binghamton, New York, Tuscaloosa, Alabama, Fort Smith, Arkansas, Gainesville, Georgia. I won't read the whole list. Your viewers are welcome to contact me if they want to see these numbers. So the conclusion is that compared to our neighbors, we're doing very well. Across the Commonwealth of Pennsylvania, we're somewhere in the middle. And unfortunately, compared to cities that are really much like us, we're near the upper end in terms of job losses. I hope that makes sense.
It does, and I'm just going to ask from your perspective of somebody who studies this regularly and knows our economy better than most anyone around here, were there any surprises? Were you shocked by anything that you began to find about the impact to Erie's economy, and then how we stack up with these peer regions as you've looked at them?
Sure. Overall, I don't think I was really surprised or shocked by anything. I think the only major shock was the one that I think everybody else suffered, which was to see just how precipitous the drop was in that 1 month period. I knew it would be bad, but I would have guessed that it wouldn't be that bad, over 15%. So that was the biggest surprise. But in terms of our relative standing, I'm afraid, as you said, I've looked at this for a long time, and the picture that emerges is very, very consistent with what we've seen before, that we are on a relatively stable overall pattern, but there is a lot of room for improvement. And we know certainly there are some metro areas that are outperforming us, and there are many others that are underperforming us. So in that sense, I wasn't really that surprised.
So one of the things we noted earlier, Dr. Louie, is that there is that lag in reporting local metropolitan statistical data, and we received April's data on June 3rd. But we see where the country's moving. Now that we have a sense of where we've been so far through the crisis, can you give us a forecast? Now that we've seen Q1 to June 3, and June 3 is only really accounting for April here locally, but we have a better pulse on the national economy. Can you give us some forecasting, what that looks like for Erie, and then what that looks like for the nation? Where are we headed next?
Sure. So let me highlight just a few key facts. Um, in terms of the national economy, I'm not sure if your viewers are aware of this, but just yesterday, literally a day ago, the national organization that dates business cycles, this is an organization called the National Bureau of Economic Research, or NBER. They're the official arbiters of when a recession has actually begun in the US economy. And just yesterday, the NBER issued a statement indicating that based on analysis by their economists, the US economy officially entered a recession in February. Another way to say that is that after the long expansion that began in June of 2009, after the Great Recession, the economy continued to rise and reached a peak back in February. And so we've now gone beyond the peak and are in a downturn in terms of economic activity, in terms of GDP, in terms of employment. And so technically we're in a recession nationally. Now, if you boil that down to the local level, it remains to be seen. I suspect that it's going to be true for the local economy as well, but that won't be clear until our next Erie Leading Index, which we're going to be compiling over the next several weeks. And so by then we'll have a better sense of whether that national official downturn, in fact, has spilled over to the local economy. I suspect, again, that it has. So forecasting the future, we'll have to wait a little bit until we get more analysis completed. But I can say that based on other benchmarks, it does seem like we are seeing slight improvement in the overall picture. So one benchmark we look at is initial claims for unemployment. So if you look at that for Erie County, initial unemployment compensation claims peaked at almost 9,000 in the middle of April. But the latest figures as of the week ending May 30th, it was down to under 600. So from almost 9,000 down to 600. This Thursday, the Labor Department will release new figures that are even more recent, so we need to track those. But the most recent statistics indicate that fewer and fewer people are claiming unemployment for the first time. And that's a good sign. That's a good sign. Tempering that is the fact that the unemployment rate overall is still very high. The latest figures released last week suggest that unemployment in Erie reached 17% in April, 17%, up from 6.2% in March. And at the national level, it is still above 10%. Even though it fell slightly, it is still about 13.3% for the US national economy. And that's just the official rate. If you include people who have dropped out of looking for work, and if you include people who are working part-time because there's not enough work, then the unemployment rate is actually higher than 20%. So the signals are still a little bit too early to tell, or to suggest to us what's likely to happen in the near term.
So, Dr. Louie, I'm grateful that you included that because I think that that's something our socially conscious attendees to Jefferson programs often think about, is those who have just flat out stopped looking for employment. And so just acknowledging the difference there, I greatly appreciate that. We're up against the clock and we're almost out of time. But Dr. Louie, for those viewing today and those who would catch this at a later broadcast, if they're to just take one thing away, maybe two from this review of the data, taking a look at what we know about Erie from now January through April, what we know about the national data, what do you think the main takeaways right now as the economy stands should be?
I think the main takeaway is that we have suffered a very, very dramatic shock to the system, an unprecedented shock in some ways. But what we've also seen is that we're fairly resilient The economy is likely to recover from this. Once again, it remains questionable as to how long it will take and how robust the recovery will be. I think the signs indicate that we will be able to withstand it. That, I think, is the key takeaway. I would add to that the fact that before the pandemic hit, there were a lot of initiatives in Erie to revitalize our economy, to improve the quality of life for all of the people who live and work here. And I think I would add that we shouldn't take our eyes off of that overarching goal, that despite this short-term dramatic shock to our economy, we should remain focused on initiatives that will help us prosper and that will improve prosperity and the standard of living for everybody across our community.
All right, Dr. Louie, I lied. One final question. You just said your team's working on the newest update to the ELI. When can we expect that to be out in the community? Because I know folks are going to be looking forward to that.
We expect to have that out probably in the middle of summer. So perhaps early to mid-July is what I'm going to guess. But it always takes more work, as you can imagine, than we anticipated. But we'll certainly release it to the community as soon as it's available, and hopefully it'll give us more better news.
Dr. Louie, we will certainly do our part here at the Jefferson to make sure we share that. Dr. Ken Louie, Director of the Economic Research Institute of Erie and Associate Professor of Economics at Penn State Barron, thank you for taking the time to join us for this Jefferson program.
Thanks for having me. It was a pleasure to be with you today.
And thank you all who are watching along at home, tuning in to the live stream on our Facebook page or watching at a later broadcast date. Dr. Louie, for folks who are looking to connect with you and the Economic Research Institute of Erie and just subscribe to the Erie Leading Index, where can we go ahead and point them?
Sure. Simply go to our website, which is very easy to remember. It's eriedata.org. eriedata.org. There they can find my contact information as well as sign up for the newsletter.
Excellent. We appreciate that. And to find out more information about both upcoming and past Jefferson programs, as well as a whole host of publications, head over to our website at www.jeserie.org. And be sure to like us on Facebook and follow us on Twitter and Instagram. For the Jefferson Educational Society, I'm Ben Spagan. Be safe, be sound, and thanks for learning with us.